Hey everyone, welcome to Industry Headlines. He's Kevin Kaufman. I'm Fred Weaver, and this is our look at what's happening in the real estate and mortgage industry for the week of April 27th. So lots of stuff going on in the news, Kevin. We're going to talk a little bit about Fannie Mae and Freddie Mac and FHA and VA borrowers and forbearances and all sorts of good stuff, right?
Yeah, it's like this is the mortgage episode, especially when it comes to what's going on in current times with COVID-19 status. So let's dive into this week's headlines, man.
So the biggest headline, this one jumped out at me. I'm not one to like to predict things, but since you and I didn't predict it, Fannie Mae predicted it. They're forecasting mortgage rates under 3% in 2021. That's pretty incredible right there.
Yeah, I got to be honest. Like when I first saw that, it was startling. I think I texted it to you the other day, and I was a little startled. But as I thought about it, I got to be honest. Like you, I don't have a crystal ball. I don't like to kind of predict things, if you will. And if I had to bet right now, I'm going to bet that that's right. Just because of some other things I believe that are going on behind the scenes with the economy and the overall, just kind of the overall state of affairs. I believe it literally has to go that low. So I think that is coming. I think we could see mortgage rates under 3% in 2021, which would definitely make things fun and interesting.
Yeah, and to put some specifics behind this, they were referring to 30-year fixed rate mortgages, a research group thinking the average rate of a 30-year fixed rate mortgage would be 2.9. So think about that for a minute. That means borrowers with extremely high credit scores, great loan to values, conventional loans, not jumbo things of that nature, could find themselves even what I'll say well below 2.9%, right? To make that average of 2.9. So pretty crazy stuff. We talked a lot last week. We've been talking about this a lot for several weeks now, just the number of people that are unable to make their mortgage payment or at least are requesting help from their mortgage lender servicer for forbearances. That number just keeps increasing. Like it's getting longer and longer, sort of like my hair, bigger and bigger, if you will, sort of like that stuff growing on your face, right? Week after week just keeps getting bigger.
Wow. Wow, you went there, huh? Okay. So yes, because we know it's not growing on top of my head, at least not that rapidly, not as rapidly as it grows on my face. But yeah, so the forbearance, nearly 10% of all FHA and VA borrowers are now in forbearance, with bringing the industry total, or I should say the nation's total forbearance nearing 7% of all mortgages have gone into forbearance. So that's a lot of people not making their payment later this week. Friday is May 1st, right? So that's a lot of people who are not going to again be making a payment on Friday.
And Kevin, there's a lot of these studies and articles that get written that are done like a small test group, right? It's like taking like sort of like the COVID stuff, right? Somebody goes and tests 300 people in one part of the country and they release data. And then scientists and researchers argue whether that's representative of the whole. But I'd like to point out that this study, the nearly 10% of FHA and VA borrowers and total forbearance is nearing 7%. This comes from data from the Mortgage Bankers Association, which polled more than 50 mortgage servicers that collect payments on nearly 77% of the entire mortgage market. So this is a very comprehensive survey that was done. These numbers that we're talking about right here, this is not maybe indicative of a small portion of lenders. This is true of most of the entire mortgage market right now.
Yeah. So again, it's a lot of people not making payments for a few months. And I'm going to just kind of roll into the next headline because they go together in a lot of ways, right? So, with forbearance, traditionally, we've talked about this a few times, right? You get to miss a few payments, but then you got to make it up. Like, you got to make it up over the next few months. Sometimes it's right away. Sometimes it's over a couple months, whatever that looks like. Fannie Mae, Freddie Mac have both come out and reiterated, hey, there's not going to be lump sum repayments required going forward from the folks that we've we've granted forbearance to. So that, that's good news for those people, especially since there are so many, that are in forbearance at this point.
Well, okay, I'm not trying to be the guy that says it's bad news, because I think that is good news, because some forbearances can result in a lump payment, right? Cool, we gave you 2-3 months off your mortgage. Now it's all due like at the end of that. That's not. But let's also look at this another way. If I have a $1,500 mortgage payment every single month, right, and I don't pay it for 4 months in a row, that's $6,000. So even if the lender comes to me and says, hey, month 5, you're gonna have to pay your mortgage, and you go, okay, my job's back, I think I can make that work. Well, now your $6,000 of mortgage payments have been spread, let's just use an example, out throughout a year, right? So now that means I got to add $500 on top of my normal $1,500 mortgage payment. We already know that most of the country struggles with saving money and doesn't have a lot of money in their bank account. So, I mean, how many of those people, even if you spread it out over a year, are going to be able to take on a $2,000 mortgage payment or a $1,750 mortgage payment for the next 2 years? So again, I'm not trying to say it's all bad news here. I'm glad to hear it's not going to be a lump sum payment. At least that's what Fannie and Freddie and the GSEs are saying. But I still have some concerns about what the actual terms are and how people are going to cope with them.
Yeah, it's going to be, it's still going to be interesting how it plays out. What happens? Do they end up moving these into, I'm going to forget the term of it, where they actually just tack it on the back end?
A deferral.
A
Yeah.
deferral, sorry. Yeah.
Yeah.
Are they going to end up moving these from an actual forbearance to a deferral? I don't know. I guess that remains to be seen, but good news for the borrowers is there's not going to be a lump sum required. At least that's the way it appears at this time. And hopefully, this forbearance gives people a chance to kind of get back on their feet or return to some sort of normal and get back to regularly scheduled payments.
Yeah, and if you're a real estate agent, mortgage professional out there, make sure you and your clients know it's always a great idea to pay your mortgage. Sure, it sounds attractive to potentially skip a couple of months worth of mortgage payments, but there are some credit effects there. There's some things that you're deferring that have to be dealt with later. And so I think as professionals in the industry, we want to get the word out that the best thing to do is to make your payment if at all possible. Yes, the banks want to work with you, but work with you does not mean you won't have to pay that money, does not mean you won't incur some sort of uncomfortable situation later, does not mean it may not affect your ability to refinance or purchase another home in the future. So again, I think it's important. This is not an industry headline, but it's my plea to our industry to continue telling people to make their mortgage payment if at all possible.
Yeah, no, not to mention, plus if headline number one, if that prediction becomes true and we see rates under 3% next year, they're going to want to refinance, and if they're making their
Absolutely.
payments, they're going to have a hard time doing that. So if you can make that payment, make it, and we'll see what happens.
Yep. Hey, thanks so much for joining us for Industry Headlines. We'll see you back here next week. Create yourself a great week.
Bye, guys.